In an unpredictable world, you can't simply wait for change to happen. We created McKinsey Live for leaders like you. Our global experts break down the need to know on the issues that matter most to decision makers and to society. We'll introduce you to leading research, new and transformational ideas, and practical knowledge and strategies, all to empower the changemakers of today, enabling you to step forward boldly, tackle real challenges, and drive change with clarity and purpose. We're helping you take control so you can drive the conversation, so you can lead fearlessly while leaving no one behind, so you can take the reins to create and accelerate growth, so you can build resilience for the future. Together, we can push towards the opportunities of our era. Let's get started now.
Hello and welcome to McKinsey Live. I'm Lucia Rahilly, McKinsey's editorial director, and your host for today's event, AI, Data Centers, and the Energy Equation, What Business Leaders Should Know. For those who tuned in last time, many apologies for the tech challenges. This is the first time we've experienced this kind of issue in nearly 5 years of running this series, which I have to say seems almost uncanny given the tech topic. Who says AI doesn't have a sense of irony? Nevertheless, we really do apologize, and we have also incorporated some of the questions that came through in the time we had together into today's event. And of course, as always, please feel free to use the Q&A functionality in your live stream to ask any additional questions that are on your mind. Okay, today, artificial intelligence. Yes, it is lightning fast. Yes, it is getting smarter daily. And yes, it has a staggeringly wide range of applications. But although it can seem ethereal and a little bit like magic, AI also has massive and extremely material implications in terms of the energy and more broadly the infrastructure that it requires to have impact at scale. Joining us to make sense of data centers and their vital role in powering the new AI economy are two of our leading experts in this area, Pankaj Sachdeva and Jesse Knopfsinger. Pankaj is a leader in our tech, media, and telecoms practice, where he heads up our cloud infrastructure and data center service line. He also advises tech company CEOs on their growth and M&A agenda, and other C-suite executives on their cloud, AI, and platform transformations. Pankaj is based in our Philadelphia office. And Jesse is a partner in our Seattle office, where he helps leaders prepare for and drive the global energy transition. Jesse brings deep insight into renewable and flexibility technologies and their integrations into the energy economy. He's got a doctorate in physics from UC Berkeley, and he frequently publishes on power systems, clean tech, decarbonization, basically the gamut of topics in this space. Also, I do want to acknowledge that Humayun Tai, our originally scheduled speaker, had an unexpected conflict, so we are super grateful to Jesse for jumping in. Pankaj and Jesse, welcome to McKinsey Live.
Thank you, Lucia, and hello to everyone.
Thanks, Lucia. Looking forward to it today.
So let's get started with some context. The explosion of Gen AI over the past couple of years has heightened the need to accelerate the pace and scale of power more than any other technology of the past 2 decades. In our own McKinsey research, we often talk about the AI economy creating $4 trillion worth of value in the next 5 years by 2030. Why do data centers play such a vital role in this broader narrative about AI adoption? Jesse, let's start with you.
Yeah, no, Lucia, as you mentioned, the $2.5 to about $4 trillion in value creation annually is a significant number. And so at that magnitude, you'd expect most business leaders need to be focused on and understanding kind of the impact of AI in their business and the opportunities it creates. Mm-hmm. But behind that AI number and kind of the stack that is going to drive that value, there are data centers. And behind those data centers is the power that's required to support them. So as we grow the demand for AI applications, we're also going to grow the need for data centers and then the power infrastructure supporting that as well. And so there's a need for this expansion of capacity, but it's not just about growing the footprint. We also need to think through the sustainability implications and really the innovations needed in terms of things like cooling improvements, what happens with chip architecture, and how can we actually get all that compute out of the infrastructure we have and are able to build. So players that are investing in the AI economy also, are aware and working on the investments in the data center space as well.
Okay, and we're likely early in this story of AI and its implications as industries seek out new AI functionalities and use cases across the board. But of course, training and inferencing AI requires huge amounts of computing power and data storage, and that increase in demand, as you said, Jesse, also translates into an increase in the number of data centers being built. Pankaj, what will the opportunities and challenges look like as data centers scale to meet this rising demand?
So I think, Lucia, the shift in the growth that we are looking at in terms of data center demand is quite unprecedented, and it's quite generational in some ways.
Mm-hmm.
And to put that in context, right, today the world kind of sits at somewhere around 70 gigawatts of data center supply globally. That's pretty much all the supply we've created net of decommissioning in the last, call it 40 years or so. Our own proprietary McKinsey model predicts that by the end of this decade, we will be somewhere in that 220 gigawatt range from a total demand supply standpoint. There could be an upside if we could address some of these constraints up to 300. So even if we just get to the 220 gigawatts, we are talking about installing 4 times the capacity almost of what we have done in the last 40 years in the next 5 or 6. So that structurally just changes the playbook in terms of making the supply available. And that's one dimension of it, right? One of the big implications of that is that now data centers are traditionally used to be very concentrated in what we'll call tier 1 markets. Think of Ashburn, Virginia, Chicago, Phoenix, and things like that, places like that. We're now moving to an era where data centers are going to where the power is available, because most of these traditional data cities are reaching their max capacity of power that can be made available in a short period of time. So you're now seeing data centers moving into places like Wisconsin and Oklahoma and Wyoming, where the local demand might not be as much, but there is plenty of other supply factors, especially power, that are available. So that's one shift that's kind of happening. The other shift that's happening is much of this growth, almost 75% of this growth, is driven by AI. And AI structurally and architecturally is much more compute intensive. So by way of context there, a traditional rack in a data center is around 10 to 15 kilowatts. An AI rack for GPUs can be anywhere between 50 to 300 kilowatts. The latest family of GPUs is being shipped at 132 kilowatt rack. So the compute intensity is much higher. These are much more power hungry data centers. And that's actually changing the architecture of data centers massively. One of the big shifts is that this kind of heat that's being produced, traditional cooling methodologies are not enough, and we are seeing a big shift to liquid cooling for that. So, and there are architectural changes up and down the ecosystem that are being premised because of that. And then the third shift is, as you mentioned, training and inferencing. AI compute and demand can be segmented into training and inferencing. Right now, we are in a very training-intense environment where a lot of training capacity is needed and being built. Over the next 5 years, we'll see the shift more toward inferencing. Training tends to require very large data centers, hundreds of megawatts of data centers that take a lot of compute capacity and a lot of data, but they don't really need to be very, what we'll call latency and user response time intensive. Inferencing is actually quite different, where yes, it is going to take a lot of power and a lot of compute intensity, maybe not as much as training. But in many instances, it needs to be closer to the population for response times. And then you need a whole host of edge data centers. So when you think of both the opportunities and the challenges, the opportunity gamut has increased quite a bit, both in size and types of opportunities where you can actually participate in the data center economy. But at the same time, we are seeing some meaningful both supply chain and technological challenges that need to be overcome, and there's real value in addressing those.
Thank you, Pankaj. So in your terms, I love the phrase you used, power hungry. These power hungry data centers are driving increased demand, and the energy sector is rapidly then becoming a protagonist in this AI story as we grapple with powering these data centers and powering all this compute. Let's talk about some of the challenges in meeting this escalating need for power, including sustainability and limitations on reliable power sources and so forth. Jesse, why don't you start us off, and then maybe Pankaj, you can build.
Yeah, and just keep in mind the infrastructure requirements or needs here are twofold. One's on the energy side, and one's the actual building and commissioning the data centers themselves. And keeping in mind, if we don't build the infrastructure, we can't actually realize the benefits of AI that we've been speaking about so far. But on the first one on energy, two things I like to sort of hit on are the first, what Pankaj mentioned about increasing rack densities sort of lead to a point also where we're building buildings or campuses excuse me, that have much higher demand for power in a single site. And so unlike load growth that we've been talking about for a while in some markets, looking at EVs reaching the grid, those tend to connect to the existing distribution grid and are quite manageable, at least on most scales that the grid is set up on. But if you're looking to add 100, 200, 500 megawatts or even a gigawatt of power at a single campus, there aren't that many places where you can just attach that to the grid, and think of it as the headroom or the open space is limited. And so we're going to need to build a substantial amount of grid infrastructure to support the rising AI economy and the needs there. And that tends to take time. Second to that is it's not just about delivering the power, but as we go upstream, it's about generating the electricity. As we expect, demand from data centers today or in 2023 was probably about 1% of global power consumption. Even as the world's consumption increases, we expect the data center number to be much higher. So get to something like 6% of global power demand, which is going to create a pretty substantial gap in many markets. So a need for new generation. And in places like the US, where we haven't seen a lot of net load growth in a while, it's actually driving almost entirely the upside that we see over the next few years. And so it is really changing the way we think about power generation and what's going to need to be built. And so we're talking about a huge load growth on a timeline here that is sort of fast for infrastructure in a world where sort of policy and regulation is being written as we speak to try to form around that.
Mm-hmm.
And just to kind of add another operational lens to what Jesse said, Lucia,
Mm-hmm.
a data center takes around 18 to 24 months to build. But with the delays that we're seeing in time to power, in equipment delays that's actually that goes into building a data center, we're seeing those timelines being pushed to the right, and it's taking longer and longer. Mm-hmm. So there's some real supply chain challenges that need to be solved for us to actually not only develop this capacity in time, but also make it available sooner than averages given the current demand that we're seeing.
Mm-hmm. Okay, so the challenges the two of you are describing don't seem insignificant, right? They're pretty big challenges. In fact, these supply chain challenges, could become more complex. How should the various players be thinking about better calibrating the supply and demand ratio and advancing towards solutions? Jesse.
Yeah, and so there's a few things here. I mean, we need to start with the sort of the backing to that enabling of that large AI economy. So we're thinking about in the range of $1 trillion of capital that needs to invest in, which leads to that 6% global demand number we just talked about. And the folks who are sitting on we'll call it the side of energizers, the transmission developers, power generation companies, are really going to need to think about how to build and develop projects that are both clean, have a high ROI, and are located in places that can support this demand. And it's a challenge. And part of the reason I raise that is there's horizons here. Typically, when we think about planning periods for grid infrastructure, 5 to 10 years is kind of the horizon that you can really think through projects. And in some cases, it's a bit longer. And so if you saw on the growth slide, we were showing a forecast out to 2030. That's very soon when it comes to trying to build grid infrastructure and build large scale generating projects. And so in that near term, there's going to need to be a bit of innovation to kind of squeeze what we can get out of existing infrastructure. So this could be things like battery storage to help manage the flow on transmission lines to kind of get more utilization of those. We're seeing deployment of small and modular assets that can be rapidly put out in the field, things like fuel cells, gen sets, small turbines to power data centers on site. There are challenges with those, both in terms of scaling up, in some cases emissions, as well as long-term reliability. You'd really like to be connected to the bulk grid. And so as we sort of find ways to scale and build with the near-term growth, we also need to think of sort of the mid and long-term horizons. At least in the midterm, there's been a lot of sort of talk over the last few years in the US about how long it takes to build a large-scale gas plant. But getting started on the build of infrastructure that can support kind of central generation, and that includes also large-scale wind and solar farms, needs to happen now in order to really start to meet the energy demands we'll see over the next decade. And then we've already started to see players begin to invest in, we'll call them the next generation of large-scale cleaner technologies, things like geothermal, carbon capture, SMR, and next-gen nuclear reactors. That is something that we'd love to see, real momentum happen over the next decade, sort of that midterm. But we think it's more likely in the stage of demonstrating and commercializing those technologies so that in that longer term horizon, call it 15 years or so from now, they start to play a major role in the delivery of electricity for both the AI economy, but also economies writ large.
Mm-hmm, mm-hmm. Very helpful. Okay, this is an area where big tech companies are continuing to invest billions of dollars, obviously. But although we're talking about these long time horizons, the space itself is pretty dynamic. We've seen, for example, innovations like DeepSeek emerge and potentially disrupt the AI market, possibly with implications for power needs. How should leaders be thinking about these really major investments in a space that's so new and open to disruption? And how might potential disruptions shift the demand and performance curves over time? Pankaj, do you want to take that one?
Yeah, Lucia, I think what we are seeing is we're riding a incredibly sharp efficiency curve on AI side. I think DeepSeek was a great innovation that came to market, but that wasn't the first in this efficiency and performance curve. And it's not going to be the last. I think it's been a series of similar innovations that have happened over the last decade that got us to GPT and generative AI technologies. If you look at GPT-2 to GPT-3, there was like an 85 to 90% reduction in unit cost of compute. And we continue to see that. We expect to see it going forward too. The reality is that it's not going to be a linear curve. It's going to ebb and flow. It is going to be interspersed by some game-changing innovation that comes to the market. The secular trend is towards reducing the unit cost of compute. So when you think of traditional compute versus AI compute, the unit cost for AI compute is significantly still higher relative to traditional compute. And that's actually a real barrier for adoption for enterprises and smaller businesses, as well as B2C use cases, consumer use cases. So what we think is, as we think through the long-term demand, it actually takes into account that some of this innovation has to happen so that adoption can go up. And then you still need the infrastructure to develop and be able to support the demand in that way. Just by way of, for context, right, our own estimations suggest that between big tech, hyperscalers, and the private capital that's coming into this economy, we're going to see close to $4 trillion or north of $4 trillion of CapEx being deployed in the next 5 years to build this infrastructure. And there are some upside and downside scenarios around it, around which people should do the planning. But that infrastructure is needed for the $4 trillion annual GDP benefit that we have projected as we go forward.
Very helpful. Did you have more, Pankaj? Or?
I think the big thing is that people are thinking about ROI, and you have to start thinking through of how do I get to positive ROIs from your own investments, and how do you start to think through where the risks lie and how are you going to actually manage and mitigate those as you go forward.
Very helpful. So folks in our McKinsey Live audience are often quite focused on the how. And we have had a number of audience questions that fall into that category. So for leaders who want to get started in this area or are looking to invest, what's one piece of practical advice that each of you might share? Pankaj, let's start with you on that one.
Sure. I think my advice, Lucia, is based on who and where in the value chain you are in this economy. That's how you should make your decisions. So, for example, if you are an enterprise or you are an enterprise CTO or a CIO, I think it's less about adoption. Adoption is going to scale very quickly, and many of the enterprises are seeing a lot of adoption already. I think it's very much about where you get optimal return on investment from your investments in AI, and then how are you going to address structural barriers from scaling within a large complex enterprise. So I think having that value orientation when you're thinking about AI is incredibly important. If you are a supplier or a developer or an LLM provider that's supplying into this ecosystem, I think what you have to think about it is a very customer back view. Who are you building your product or service for? What are the demand characteristics that are going to drive the demand for your products and services? And in the end, are these for a enterprise CIO or a CTO? Are these for a build to C customer, or are these for a big tech hyperscaler? And how would they consume that? And then if you're an investor, I think the biggest thing that you have to think about it is where there is a durable business case. Is your business model that you're investing into, is that durable? Is that adjusted for some of the risks and ebbs and flows that you will see? And do you actually have flexibility in your business model that you can scale up or scale down your investments as you start to see demand and supply patterns shift? And then finally, are you in this day and age accounting for some of the geopolitical risks that we are seeing that will impact this ecosystem longer term? But given the scale and complexity of the gaps we're trying to address, the last thing I'd say is no single company, corporation, enterprise, organization will be able to solve some of the challenges that we've just discussed and talked about. I think it will require an ecosystem of partnerships. We're seeing many of those emerge, but we think that many more of those needed. And just thinking through how do you actually build those partnerships or participate in those ecosystems is also incredibly important.
Thanks, Pankaj. And Jesse, over to you.
Yeah, just jumping in on the energy side, a couple of things as a reminder that the maybe unique part on energy and power is, at least in most parts of the world, we're on a synchronized grid that's a shared resource. And so the same frequency that you see in South Florida and Miami looks like what you've got in New York today. And we're sort of connected by the speed of light. And so just keeping the mental model that what you're actually playing into is a system, and it's not, AI power, it's actually, for the most part, power on the grid. What you should be bringing, I echo a lot of the comments Pankaj made across the ecosystem. On the power side, it's what's the durable business model and what's the value you're bringing either to the data center and AI economy that will unlock new build, or that actually supports the broader grid and the broader sort of growth of the ability of the power sector to meet the challenges of the energy transition. So this will mean looking at potentially new business opportunities that emerge as this sort of confluence of load growth and kind of the societal needs across the grid happen, which also leads to probably new investment models. But all of this, I think, anchored in a durable business model that's sort of looking to this integrated energy system lens, really can carry a lot more weight over the next decade or so.
Excellent. Thank you both. I'm mindful of time. We've got a lot of audience questions here for both of you. First, quite a number of questions on tariffs. Each of you has alluded to supply chain, geopolitical risks. This is obviously top of mind for leaders and for most of us worldwide. Acknowledging abundant uncertainty, what are the implications of these new tariffs for stakeholders in this data center space, and how can leaders prepare? Pankaj, could you take that one?
Sure. As you said, Lucia, there's significant uncertainty that exists on this topic, given both the recency of tariffs and then the contrasting market forces that are at play. I mean, the reality is that the cost and access to materials needed to build data centers will likely shift, right? The new tariffs will impact a lot of globally integrated industries, such as electrical equipment, appliances, components, and if you think of a data center, the capex for a data center is somewhere around 10 million in US averages per megawatt. And about 50% of that is mechanical and electrical equipment. And there is a large part of that BOM that has components that are imported or are integrated into global supply chain. So we'll see impacts in the mechanical and electrical that address around 50% of the total capex. And then you talk about the shell of a DC, which is the building itself, physical construction that requires access to raw materials like steel and aluminum, which potentially have some cost impacts due to tariffs. The other thing is that you could see some challenges in the supply chain, and it could exacerbate procurement and lead times, which are already quite long. But there could be further delays in critical equipment like generators or cooling technology, liquid cooling technology. On the flip side, we're seeing some select semiconductors that have been offered tariff exemptions. Now, there is some uncertainty around that too, because many times semiconductors are often packaged as finished goods for data centers and servers and storage systems. So how will that get handled? There is uncertainty around that. I mean, the reality is that even with potential increases, and there's a lot of uncertainty of how much capex increase this would be, US remains a competitively placed market in terms of capex per megawatt, and I think that will remain somewhat competitive going forward. I think at the macro level, the shifts in the demand and shifts in supply chain, that will cause some uncertainties, right? On the supply side, you can see like some of the smaller suppliers, they will have a harder time, you could imagine, managing their costs and could come under stress in what happens through suppliers for them. The other side, on the demand side, is a big premise of building this enterprise infrastructure is scale up and growth in enterprise demand. And if there are delays and uncertainties in their own investments in AI coming out of tariffs, that could shift some of this demand to the right, or there might be certain uncertainty. So net, I think there's still a lot of unknowns. Our advice to business leaders, given the externalities, is to actually set up a nerve center that allows you to have very good visibility on what the actual impacts are on your supply chains and on your customers, make operational decisions quite fast, and start to think about trade flows, macroeconomic issues, and other things in quite an analytical way going forward and build those capabilities.
Thank you, Pankaj. I'm mindful of time. We're really close, but Jesse, I'm going to try to squeeze in one more on the energy challenge. To what extent are data center builders also investing in clean energy in the current environment? Does it still matter?
Absolutely, and it's been substantial historically. They've driven a lot of the PPAs and the solar and wind scale up we've seen. and none of them have backed off sustainability commitments. So while there's pretty substantial debate about how exactly to do the accounting on clean energy, given we're all on a shared grid, and you sort of, it's hard to tag an electron once it's been produced, or a megawatt hour once it's produced. We are seeing significant investment. We expect most of the clean energy over the next couple of years to still come from solar and wind. But these early stage investments in those next gen technologies I mentioned, geothermal, CCS, nuclear, are really in a large part being driven by commitments from these companies, which may help us unlock that clean energy future.
Very cool. Okay, fantastic. Pankaj and Jesse, thank you again for joining us today.
Thank you so much.
Thank you for having us, Lucia.
And many thanks to all of you in our McKinsey Live audience. You'll be able to find a replay of this, as always, in our previous McKinsey Live events at mckinsey.com/live. We've also published a number of pieces of research on the rising demand for data centers, including as it implicates power and real estate on mckinsey.com. In fact, we have a new one on the docket for later this week, so visit us for more. And finally, a quick heads up that we have 2 upcoming live events next month in May. First, a discussion of what's in store for M&A in 2025. We started the year with lots of optimism in M&A, thanks to a variety of factors, falling inflation, positive valuations, and so forth. But that optimism has quickly faded. So this will be a session talking about what it is that successful programmatic acquirers do differently to maximize shareholder returns. That's May 13th at 11:30 a.m. ET. And the second one, we will actually be talking about tariffs, another really complex topic that's incredibly high stakes and also fast changing. The current environment defies traditional planning methods. So we'll have the leaders of our geopolitics work, Cindy Levy and Shubham Singhal, join us to talk about how to make sense of what's happening and chart a course forward to gain an edge. That's in about a month. 22nd of May at 11 a.m. ET. See you there. Have a great day or evening and be well.